Holy smokes. Dan Ives went on CNBC last night and dropped some bombs for Tesla stock investors. I mean, this was not your normal Dan Ives that gets on CNBC and says the same thing over and over again. Dan Ives is talking about Tesla stock doubling up in the next 12 months, a $1 to $2 trillion valuation for AI, a new growth renaissance that is coming for Tesla stock, and much more. This, I think, is a must-watch interview for all Tesla stock investors. Over the past year, Dan Ives has a 53% success rate and is ranked 1,400 out of 8,900 Wall Street analysts. If you look at Wall Street experts, he's ranked 3,398 out of 38,000. So he is in the top 10% of Wall Street analysts. And that's just looking at over the past year. If you pull this out to a 5 or 10 year time horizon, he's in the top 2% of Wall Street analysts.
Joining me now to make his case, Wedbush Securities Managing Director Dan Ives. Just like, you know, we talk about these big pay packages, it's like $1 billion, and it really is that. But to the point, if Robotaxi is the next big thing, do you think that this is the man who can lead Tesla to the future? And does Robotaxi, is that the thing that's going to make Tesla regain its $1 trillion market cap?
Musk is Tesla, Tesla is Musk. And I think ultimately, right now, Tesla is the most undervalued AI play in the market. I mean, I believe the AI component of Tesla could be worth $1 to $2 trillion alone. And this, in my view, this is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, in my opinion, will be a historical day for Tesla.
Okay, they unveil it August 8th. Any idea when production starts, when we would actually see robo-taxis on the road?
Look, I think over the next 18 months, I mean, this is something, we're not talking 3-4 years away. I think this is the start of what's going to be not just robo-taxis, but when you talk about full self-driving and autonomous, Tesla is an autonomous AI company. It does disruptive tech. And I think we will be looking at ultimately a stock that could potentially double over the next 12, 18 months.
We have a headline today from CNBC.com's Laura Kadalodny. According to internal memos, Tesla's workforce has shrunk by 14% since Elon Musk announced layoffs back in April. In December, Tesla employed a little more than 140,000 people worldwide. Today, it's 121,000. What do the layoffs mean to you in terms of resources aimed at growth and cost efficiency?
Yeah, look, they've had to rip the Band-Aid off because we've seen softer demand globally, especially in China. That's the hearts and lungs of the Tesla story. But I think they have been proactive. And even though we're not expecting fireworks for the June quarter, this will pay dividends. It's what Musk and Tesla have needed to do. An adult needed to be in the room, and Musk stepped up. And I believe right now, when we look at the Tesla story, they've gone through some Category 5 hurricane. But I think on the other side of this now is going to be that Cinderella story will return to Tesla, and I think AI is going to be the key.
You know, there was a lot of hype over Cybertruck when the launch happened, when it rolled out off of the production floor. Do you think expectations and the hype around Tesla itself make the rollout of Robotaxi problematic?
I think you're going to have a brighter spotlight like we see with Musk and Tesla, but from a core technology perspective, I believe this is really going to be the start of what's going to be a renaissance of growth for Tesla, not just on autonomous, but even on a demand perspective.
Meanwhile, you've got like Ferrari moving into the EV space. The company's offering a posh new electric vehicle sports car that comes at a price tag of, I'm going to choke on this too, $500,000, set to be released next year. CNBC's Robert Frank sat down with Ferrari CEO Benedetto Vigna and says, well, here's what he said about the car and the demand for EVs.
You know, the final judge will be the client, but I can tell you that several people, more people start to see, to try our electric Ferrari, and they have a good feeling. I believe that in the future, we will have clients that today are buying our cars, that they will switch to electric.
Will they?
I think they will. And I think this does, when you have a brand like Ferrari making a bet like this, it shows where the world's heading. And I think they're hedging their bent. In my opinion, Ferrari, it's the gold standard. And this is an important, something that a few years ago, never thought that you'd see this headline.
Let me know what you guys think about that interview down below in the comment section. I'll tell you, my personal opinion is wow. For a Wall Street analyst to be so spot on Tesla, it's pretty rare. And Dan Ives sounds very bullish on Tesla stock, considering this is the first time I can recall he's going on live television talking about Tesla after the shareholder meeting and Elon's comp package being reapproved. Yes, the courts need to officially reapprove his comp package, but it's almost like a done deal. Considering Elon Musk said on X yesterday that he will do his utmost to ensure that their faith is rewarded, this is really in regards to the retail investors and institutions that put their confidence with Elon Musk and reinstated his comp package. I mean, I don't like to put all my eggs in one basket either, but if I was going to, and yes, I'm like 40% all in on Tesla, which is basically all in if 40% of your portfolio is in Tesla, I would put him with Elon. Like, if I had to choose one person, yeah, take my basket of eggs, Elon Musk. Things can take some time, but as Elon said on the shareholder meeting, he always delivers. Now, into specific regards of what I expect next for Tesla stock, I am expecting that Tesla will be somewhat subject to what happens in the broader markets for a period of time. Meaning, if Nvidia, AI stocks, or the broader markets sell off, there's not much that Tesla can do to prevent that. If broader markets sell off, Tesla stock's gonna sell off. If broader markets rally, Tesla's probably gonna rally. Until at least July 2nd, which we do have analyst consensus for Q2 delivery numbers at about 440,000. The IR compiled estimate is a little bit more important because that's the investor compiled estimates for Tesla deliveries. Analysts and investors, they're much different groups of people. Analysts cover a stock, and investors actually invest in a stock, so it's more important what investors think deliveries are going to be. In which it's most likely that the IR compiled estimate for Tesla deliveries will be closer to 420,000, 415,000, maybe even as low as 410,000. And I'm confident Tesla's gonna come in with probably a 430 to 450,000 number. And that's going to be seen as good news, even though it's going to be negative year over year because last year Q2 was a strong quarter coming in with over 460,000 deliveries. It's still gonna be better than what Wall Street was expecting. And considering Tesla stock is priced for not a great outcome, I think you could be set up for an upside surprise around July 2nd when we get Tesla's Q2 delivery number. Now, earnings will also be important, but I want to remind you that the biggest kind of new information is that delivery number, and it takes a lot of the hype or fear out of Tesla earnings. Because if Tesla has a good delivery number, they're going to have good earnings. The question then becomes, what are margins like? And you could see in the last quarter in Q2, Tesla really did not cut prices at all, a little bit. Tesla was really buying down the interest rate, which is kind of like cutting prices instead of cutting the price. You're buying down the interest rate, and we don't have a definitive answer to how much that costed Tesla. But it does look like demand has picked up as per the Google Trends data that is at 5-year highs. So I'm also confident that you are going to see better than expected margins specifically on Tesla earnings and probably a lot more optimistic of an Elon Musk and really the overall Tesla management team. So after July 2nd, Tesla can start moving a little bit more independently than the broader markets. Again, for better or for worse. Now, the way I look at the broader markets, really no matter what happens, it's a win-win for Tesla. And let me explain. Whether markets continue to roar higher, the economy holds up, the Fed does magically cut rates at the right time, that's good for Tesla. You will see a broadening out of our markets and potentially no crash at all. Or in the better case scenario, in my personal opinion, you do see the economy weaken, you see the Fed make an error, Tesla goes on a deep discount, aka markets crash, we get to buy more Tesla stock, and one of the last great buying opportunities that we are going to see over the next 5-10 years, and we start a massive bull market, a broad-based bull market, a strong bull market, and hopefully avoid a recession. That would be the more optimistic scenario, but either way, I'm comfortable with both. Tesla can sell off and I'll buy more, and we'll set ourselves up for a broad-based market recovery and a lot healthier of a market overall. And I do think to some extent AI will prove to be a little bit more hype than material in the short term. Because the reality is the markets are expecting Microsoft, Google, all these other companies that are deemed, kind of beneficiaries to AI to start putting up AI results and selling products and services with AI. And we all know that's not happening on any kind of material scale. So yes, eventually there will be a day of reckoning for AI and for your AI sympathies like your big tech. But then the market's interest will turn into companies that are really applying AI, that are really bringing in AI dollars. And I think at this point, actually I know for a fact, Tesla is bringing in the most AI dollars out of any other company. I mean, ChatGPT may be similar to Tesla, but I still think Tesla's winning that race by probably a long shot. And as Dan Ives said, the headline of that clip was Tesla is the most undervalued AI stock in the markets, and that is true. The markets will realize that, and Tesla will be rewarded favorably for it. See, and the beautiful thing about that is normally when the story is growing, the story is starting for a company, meaning robotaxis. Investors are investing in something that is a year down the line, 18 months, 2 years down the line, the multiple can get large. There can be a lot of speculation because we just don't know how big that will be. And when you're thinking about something that has a TAM the size of robotaxis, you can assign basically whatever margin you want on Tesla today and justifiably make it make sense, especially when the Fed starts to cut rates and we get a little bit more clarity on the economic situation. That's why it's common for a company to actually see its PE multiple compress as you start to get larger growth. Look at Nvidia. Nvidia is traded at 60 times earnings for a long time. Now it's trading at 30 times earnings. Now, some of that could be the markets being a little bit cautious because eventually the growth will slow down and the multiple, could expand get bigger a little bit. But that's usually what happens. As companies get larger, they get more profitable, they become more successful. The margins actually, the P multiple actually falls. So Tesla could really see a ramp up of a P multiple over the next 12, really 24 months, but I would expect this could happen over the next 12 months. Meaning, for an example, Tesla's currently trading with a P multiple of closer to about 55-ish. You could see that go to 100 pretty easily. Back in 2020, 2021, Tesla's P multiple was 1,200. What's to say it couldn't go back to 100 with $4 of EPS next year? Let's call it that. And you're looking at Tesla, that's a $400 company. Not to mention if the P multiple goes to 100 and EPS expectations for 2025 or let's say a year from now, markets start to look out another year. Let's say 2026 EPS is expected at $6 per share. Assign 100 times multiple on that, and Tesla stock all of a sudden is $600 per share. You could start to look at some pretty crazy returns as that multiple does start to expand, as the markets start to realize Tesla is by far the biggest real world use case investment for AI, which that never made a lot of sense to me because this seems obvious to us, but Wall Street, well, let's just be honest, they're not the smartest people. Some of them are geniuses, but they're not the smartest people. And a lot of Wall Street has a very short-term kind of way of thinking. They would rather, get 50% and put their money up for a year to impress their clients rather than invest their money for 3, 4, 5 years and make 1,000%. And that's why Wall Street's usually late to things. And I think they're already late to Tesla, let alone as Tesla does go higher from here over the next couple of months, as I think is reasonably possible. Again, the broader markets, what happens with the economy, the Fed, economic data, earnings, AI, all of that's going to affect Tesla as well. But the fact of the matter is Tesla is still down over 30% in 2024 alone, and you're much better priced for a recession, for a Fed error, for AI kind of dissolving in front of us. I mean, Tesla's not getting any AI love from the AI recent, hype or momentum in our markets. Tesla's pretty well priced for a bad outcome. And I don't know about you guys, but I like buying stocks that are mispriced and trading cheaper than where I think they should be. And that is Tesla by a long shot. So I kind of spilled the beans already, but I do think give it a year from now, Tesla stock could easily be a $400, $600 stock. I mean, Dan Ives says you could see a double up in Tesla in the next 12 to 18 months. That would put Tesla at about $380 per share, along the lines of, where his price target is. I think that's actually much higher than where his price target is. I think his price target is 300 now, I want to say. But Dan Ives thinks that even Tesla can hit roughly $400 within the next 12, 18 months. I think it could go probably a little bit higher than that, especially if we start to get some real rate cuts. So let me know what you think about all of this information down below in the comment section. Again, just to be very clear, I'm not a financial advisor. I'm not a financial planner. I don't know what's going to happen in the markets. I do think, broadly speaking, the risk to reward is pretty bad in equities. You do have the markets expecting some historically high rates of growth for your earnings, and usually when expectations are this high, it does set you up for a little bit of disappointment. So don't be surprised if stocks do sell off over the next 1 to 3 months, probably before the election. And then, historically stocks rally after the election. And that's when the Fed should be cutting rates. And hopefully the economy is not in the gutters by then. And if that's not the case, if the economy is still doing fine after the election, then I think markets overall will be okay. But this information is subject to be wrong, it's subject to change, and I can flip-flop my opinion on the first bit of good or bad data. So that is always a possibility as well. You have to have confidence in what you are investing in. Let me know what you are investing in down below in the comments section. Do me a quick favor as well. It's cost you nothing. It's free 99. Hit the like button and subscribe to the channel. Thank you for doing that. If you guys also want to come trade with us live in real time, check out that link down below in the description of this video. I did go ahead and make an earnings trade for next week, and that is on FedEx. If you guys want to see that trade, check it out down below in the description of this video. Most importantly, forget all of that mumbo jumbo. You guys have a great rest of your weekend, and I will see you in the next one.